shares are doing well, which for a consumer-facing tech company is an unusual success right now, we should say. So talk to me about this model, because as I understand it, you find people who want to rent homes, you then find people who have unoccupied homes, and then you as a company actually fit those homes out and make them livable for the renters. Who bears the cost of that?
Mm-hmm. Yeah, first of all, thanks for having me, Ed. We just got listed here, and it's my pleasure to be here to share our story. So we do front the capital, and we are responsible for fitting out the apartments. We usually would add a wall to the living room and turn that into a separate bedroom with private access, so that it's called the N+1 model. And we then, rent out the rooms individually with individual pricing to tenants, and they can move in and out very quickly and easily.
How long does it take typically to actually recoup the cost of that refurbishment of the homes?
Yeah, in terms of the yearly contribution margin, we are actually positive in the second year.
Wow. Well, look, the reason I ask is because we know obviously that the Chinese housing market has endured years of sort of upward growth. Speculative buying has been actually a problem the government have been very concerned about. Mm-hmm. What happens if we do end up with a significant market correction and you're sort of halfway through a lot of these projects to develop for the renters?
Oh, well, the risk of that is actually quite minimal, because we have three demographic trends that's really supporting us. The first one is on the supply side. Because the homes are so unaffordable, there are more and more people who have decided to rent for the foreseeable future. So the supply is the demand is actually going up. And on the supply side, the landlords used to be able to just hold on to these idle assets and still be able to capture a nice price appreciation every year. But now they can't do that anymore. They have to make these assets productive by renting them out. So the supply also increases. And then the municipal governments are completely behind this because they need to attract young people to relocate to their cities and make them, enable them to really settle down in their cities, and they need to make the process easy. So they are supportive businesses like us to solve this problem.
Now, I mentioned obviously interesting time for a consumer tech company to list at the moment, mm-hmm. particularly a consumer tech company that is sort of neither quite a real estate company nor a technology company. It sounds a bit like another big one recently. Why did you choose to go public now?
Oh, well, we are ready. The company, in its long-term trajectory, we have already established our business model, and we have established a very strong foothold in the segment that we focus on, which is the monthly rental under 2,000 RMB, which is equivalent to $280 per month, and we're the leader by far. So we're quite ready for that, and we want to gain access to the sophisticated capital market to capture the rest of the growth.
Talk to me about that market, because look, I spend a lot of time talking to US CEOs or US banking or legal advisors, and one of the things we always hear is how difficult it is in the current environment for them to do business in China because of everything that's going on in the geopolitical front. How does that look from the other side as a Chinese company coming to the US and doing business?
Oh, we find it very fair. The process is very standard, it's very transparent, and we need to comply with the regulations here in terms of disclosure requirements, in terms of audit requirements and everything. And the standard hasn't changed. So we just comply with the whole process, and here we go. Here we are.
And obviously a big part of this company is technology. You've talked previously about how the technology sort of drives the differentiation in this business. You will also have a significant amount of data on Chinese consumers, both renters and owners of real estate. How do you protect that data when we are in an era where there's so much sensitivity, particularly around the government's ability to access data on consumers?
Yeah, well, we are compliant with the security requirements, both on the physical part and also on the software part. And primarily, we use the data for our own use to understand our users' needs better. So when we introduce new services to them, it's pretty accurate, and the take ratio is quite high.
Okay, and just let's talk about the international piece. Obviously, the listing is here. Are there any plans to take this business elsewhere in the world, particularly here in North America?
I think I see a lot of similarities between the North American and the rest of the world demand and situation as in China. I've actually spent 10 years studying and working in the US. So I see a lot of similarities, but the Chinese opportunity is so dominant and it's going to keep us busy for a long time. And we're a very disciplined company. We selectively choose the markets we want to be in and we're committed there and we increase the penetration locally.
Well, if you ever find an apartment here that's $280 a month, let me know.
Okay.